Hi, this is Vijay Bambwani and I'm recording this video for you from the relative safety of my house. I hope you are also taking precautions in these challenging times of the coronavirus to protect yourself and your family members by staying indoors. I will begin by cautioning you about why the worst is not over yet and why I believe that fishing for bottoms at these times may be actually a very challenging affair. I would like to begin with a question first. Do you really think that equity market indices, the Nifty 50, the BSE Sensex, the Banking Nifty, are actually the benchmarks or the barometers of the economy? I would beg to differ. With equity participation in this country being close to between 5 to 6%, what the Nifty or the Sensex does on any given day impacts maybe 5 to 6% of our population. To be sure, this number is extremely big when it is seen in the perspective of 5 to 6% of 130 or 135 crores of a huge population that we have. But there must be some other barometer that actually measures the economic activity far more accurately and is all-encompassing. By all-encompassing, I mean which concerns everybody. Is there any such barometer? I think there is. And not only there is such a barometer, but it is also traded on the exchanges and information and data on it is available on your cell phones as we speak. I'm now talking about the USD INR, the rupee peg versus the dollar, or the rupee strength or weakness versus the dollar. Every Indian may not necessarily be concerned with what happens to the BSE and the NSE indices, but every Indian, man, woman and child, is concerned with what happens to the buying power of the rupee that he or she has in his or her pocket. Allow me to explain. So if you were to take this 100 rupee note and go to your friendly neighborhood shop and ask for Cokes, if today you were able to buy 3 bottles of Coke with that 100 rupee note, and you go there tomorrow and with the same 100 rupee note you're able to buy only 2 bottles of Coke, you know what? You're 33.33% poorer. Your 100 rupee note is able to buy 2 bottles where earlier it could buy 3 bottles of Coca-Cola. So the purchasing power of the rupee has eroded. And as I record this video on Monday morning on the 23rd of March, the rupee has hit an all-time low versus the United States dollar and crossed the 76.25 mark, which effectively tells you that we are at a lifetime low against the dollar. India, as a net importing nation, will now begin to import inflation. Any and everything that you import will suddenly become more expensive. So starting from your cell phones, your capital goods, technology, pharmaceuticals that we import, heavy machinery, even oil and gas that we import, 2/3 of all our imports are actually hydrocarbons or fossil fuels, oil and gas. So till the time the rupee does not stop falling against the US dollar, I will not agree to the fact that the worst is over. According to me, in my humble opinion, the rupee is the best barometer of the economy and not the stock indices. And unless the rupee tells me that the worst is over, I will not admit that the worst is over. I will let the market talk to me. Why the impact of the coronavirus has been downplayed is another aspect of the market that I want to talk to you about. Do you know in the metropolitan cities like Mumbai, Delhi, Kolkata, Bangalore, Chennai, What percentage of migrant labor actually constitutes our a day-to-day workforce? It could be as low as 10% or it could go as much as 25%. And hey, all these guys are now rushing back to their villages to be with their families. Which means that to this extent, there is demand destruction in the metro cities for FMCG companies. That means that much less toothpaste, slippers, medicines, talcum powder, and God knows what else. Unless these guys come back to their jobs again, I don't think the demand is coming back. Another aspect that I have talked about is something that I feel the experts are missing out. Demand destruction is something almost every television channel is talking about. But distressed supply is something people are missing out on. What if the producing countries, who also happen to have forex debt on their books, resort to distress sale at bargain basement prices of natural resources in the global export markets to pay off their forex loans, which is exactly what is happening in LATAM, that is Latin America, which is what is happening in MENA, Middle East, North Africa, which is happening in Southeast Asia, the ground zero of the 1997-1998 forex crisis, the currency crisis. It is also happening now in APAC, Asia Pacific, starting with Australia, to the extent that the Australian dollar is actually called a commodity currency, which means a currency that derives its strength from the export of commodities. Here you have a problem. There are fewer buyers, and the sellers, in order to pay off their debts, are willing to sell at lower and lower prices. Do you know Venezuela, which is a huge oil exporting nation, is willing to sell oil at less than $18 a barrel? Yes, you got me that. That's right. Less than $18 a barrel. And the price is negotiable, which means if you bargain hard enough, they might sell it to you for less than $18 also. This is the extent to which the global economy is likely to shrink. This problem is not going away fast. This will require you to dig your heels into the ground, pitch your tent and say, I'm going to be like a chess player who will make a move once in 45 minutes, a very calculated, very deliberate, very carefully considered and contemplated move every time I move my pawn on the chessboard. Which is why I'm saying that this problem is not going away in a hurry. You're in it for the long haul, plan accordingly. What should you do? If you were to make a mistake, what kind of a mistake would you rather make? In my opinion, for myself, I talk for myself now, I would rather err on the side of caution. I would rather focus on capital protection than capital appreciation. I, as a child, used to hear my dad and all his business owner friends coming over on Sundays for lunch and dinner, and that's where I picked up all my knowledge of trade, finance and business first hand from my father and his friends, of course. I used to very often hear this one gentleman who used to constantly keep repeating this old saying, Sar Salamat to Pagdi Hazar. If your head is intact, which means if you're alive, you can wear 1,000 different turbans. This is a time when you should be focusing on staying alive, both financially and physically. Please do take very good care of your health, your investments and trades. This is Vijay Bambwani signing off for now, not without reminding you to please like this video if you're watching this on YouTube. In the comment section, do let me know what you think about this video and what other videos you would want me to record in the future. And please do share this video with your family and friends. I will keep coming back to you every day as usual, recording videos from my house. Also join me on Telegram on our official handle Equity Master Official, where I put my views and news every single day. Thank you.
Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.